This is the weekend market recap on all major indices. In this video, I'll cover what's going on with the DAX, Nikkei, Dow Jones, and the bond market and the VIX, as I'm starting to see some interesting things take place. So first of all, let's have a look at the DAX 30 index. Now this is the standard chart, which is just doesn't include the futures trading, just the normal trading hours of the index. If some of you seen my previous overview analysis of this chart, I noted the bearish engulfing candle. Now I said if we get confirmation upon this, you could take a short position and at least aim for the first cap to be filled, which printed. So that would have worked out a nice trade of at least a few hundred pips. Now, where this may head further, let's take a look at the indicators here for a second. Now, I'm not too dependent on indicators. I do use them from time to time, mainly for a divergence tool and a few other things, but I thought I'd do it here because I also look out, in regards to these indicators, what I call the rate of the rollover. So what I mean by that is we can see we've had 4 consecutive red candles. We have the indicators here, the MACD, stochastic, RSI, and the money flow with a pretty steep rollover. So what I mean by that, the trajectory of these indicators is pretty steep. Now, when I've seen this in the past, it does usually reflect that we're going to see more selling ahead. Now, just to take note, on the money flow index, we did have a bearish divergence on the money flow. It didn't happen on the RSI, but it did print on the money flow index, where we had the money flow starting to weaken at this point around the 18th of October. Conversely, though, the price printed higher as the money flow started to roll over. So that, if you paid attention, if you witnessed that, that would have been another good reason to set up a short position. Now, where this may head, looking further on the daily, depending on what happens next week, as I said, I'm anticipating for further sell-off to come. We do have still gaps to be filled. Here we have the gap at 12,828, and then we have this one at 12,350. I doubt that one would get hit next week because that's a fair stretch, but given the candles have transitioned and moved through the shorter moving averages, this one could very likely get hit, which would put it towards the lower end of the Bollinger Band. So before I move on to another index, let's just quickly take a look at the monthly chart. I may go across to this one as to what is happening on the bigger picture and the actual wave count and structure of things. So I noted here I called for June 2017 to be the 5th wave, a final wave 5 higher, and then I was looking for after that an A, B, C pattern to print, which we've had the A leg down and the B higher. And now, given how this candle's turning out in the month of November, this is signaling that this could be the top of the B wave, and we could get the C wave down. How far down it goes, we'll just have to wait and see. But this could even target usually the C wave is lower, moves to a lower point to the anchor of the A. So in other words, we could possibly get a target of 11,000 or even lower. We'll just have to wait and see how that plays out. Okay, let's have a quick look at the Nikkei 225. I noted this last week, I believe it was Thursday the 9th of November. Really wild and volatile move on the Nikkei on that day. At one point it was up about 400 points, and then at one point it was almost down 300 points, or even a bit more, which gave a wide range of 700-800 point move in one day, which is quite crazy. But I noticed this because this was interesting. This move came before we seen the move in the European markets, and the day later on during the Dow session where it had a low of 250 points before it was propped up. But this signaled to me that money was already coming out of the Nikkei, and it flowed over to the European session and then started during Wall Street. And this usually comes from the big investment banks from Wall Street, and most likely some central banks as well. So the Nikkei's move was the indication that something was definitely going on. I mean, given how overbought it is, it's definitely due for a pullback regardless. And if we take a look at the weekly, this weekly candle is pretty nasty. Even though it's got a wick on the bottom, it's a terrible, very nasty shooting star. We have a gap, needs to be filled at 19,950. So if selling increases and accelerates, that gap could be likely filled over the next month, 2 months. We'll just have to wait and see if that prints. Okay, let's take a look at the Dow Jones. I noted on the Dow Jones analysis I did during the week the negative divergence on the RSI on the IG futures chart, which is still printed the same on this chart, and also the money flow index as well. There was more of a negative divergence, and I did note to say that with these candles, these spinning tops and these short range candles, it was definitely indicating that the bulls were getting exhausted and I was looking to roll over, which on the Thursday, the Dow at one point was down 250 points, but once again, the market manipulators, the investment banks, I don't know, they're willing to allow the other indexes to drop, the DAX, Nikkei 225, but they're still hell-bent for some reason not allowing the Dow to drop too much, which leads me on to what's occurring in the bond market, what happened on the bond market during Friday's session and the VIX. I believe all these things that's happening, the sell-offs on the other indices is going to signal, I think, a breaking point very soon. Next, could be possibly as early as next week, that we may finally see a decent rollover on the Dow. And as I said, the reason why I'm saying that is bond market Friday, it was strange. The bond market sold off, so the yields went up. So in other words, money was coming out of the bond market. And usually when that happens, money flows out of the bond market and usually goes into the Dow, the S&P and the Nasdaq index. But that did not happen this time. So it's been, the way I view that as, money's being left on the sides. And that also supports what is happening with the DAX and the Nikkei, that if money was going to flow back in the Dow, the big investment banks and probably some of the central banks wouldn't have pulled the money out of the DAX or the Nikkei. They would have left and floated it there. So it's telling me that, I don't know, maybe they're getting nervous about these markets. There's a lot of talk about Trump's tax plan not coming into effect till 2019, so that could maybe be the catalyst of this and could be the excuse to finally give the Dow a bit of a shakedown, as well as the S&P. But it's very, as I said, it's very interesting that the money from the bond market didn't flow back into the markets. So that's, yeah, it's one thing you always need to keep an eye on what's going on in the bond market. So this to me is signaling something's going to happen next week. Now, if we just quickly take a look at before I wrap this up, let's have a look at the VIX index, because this to me is signaling something else is going to happen as well. We can see from this candle, which is a bullish engulfing, which has been confirmed, we're starting to get consecutive candles on the upward movement. Now the VIX at the moment is currently 1129, and this is signaling to me on the VIX that we're possibly going to see a spike up here. Now usually what happens when markets get nervous, fund managers and the likes, they'll buy the VIX as an insurance. So what they'll do, they buy the VIX as insurance. The VIX goes up, conversely the markets go down. It's a hedging. It's a type of hedging they use. So these signals here on the VIX is telling me that some big market players are getting nervous about maybe the overvaluations, extreme overvaluations on the Dow and S&P and the Nasdaq, and the nervousness about Trump's tax plan not coming into effect for a long time. Starting to say, well, hey, we need to hedge just in case, because things look like they could start to roll over. And also, funny enough, on investing, has identified, which is correct, the homing pigeon, which is a bullish reversal. So to me, it's like there's a double confirmation: the homing pigeon and then the bullish engulfing. So what is this telling me for next week? It's signaling that I think we're going to see a spike in volatility, which is going to lead to volatility in the markets, and we could finally see the Dow take a decent hit. I read somewhere that it's been the longest on record since the Dow has not had a 5% correction, which is absolutely crazy when you think about it. But I do believe if something comes, it's going to come and it's going to hit hard. So for me, I would not be definitely looking at taking long positions. I'd just wait to see how this plays out, guys. And that's a wrap for the indices.